You're lying in bed. It's late. You're scrolling. And there they are again. Someone your age. Someone you went to school with. Standing in front of a modern home overlooking Lake Zurich. Parked outside is a brand new BMW X5 or Mercedes GLE with temporary dealer plates still attached. Swipe. Now they're skiing in St. Moritz. Swipe. Weekend photos from Lake Como. Swipe. A luxury kitchen renovation with marble countertops, custom cabinets, and high-end appliances. And you're sitting there doing the math. Same age. Same country. Probably earning a similar salary. And you ask yourself the question millions of people across Switzerland secretly ask every week. How are they actually paying for all of this? Because the numbers don't seem to make sense. Here's the truth. For many people, they don't. Most aren't wealthy. They're simply financing the appearance of wealth. And in 2026, that illusion has become easier, and more dangerous, than ever before. Welcome to the fake rich trap. Let's begin with a statistic that explains almost everything you see on social media. Switzerland has one of the highest household debt levels in the world relative to the size of its economy. According to data from the Swiss National Bank, SNB, the Federal Statistical Office, FSO, and international financial institutions, Swiss household debt has remained among the highest globally for years. That surprises many people. After all, Switzerland is famous for wealth. High salaries. Luxury watches. Private banks. Beautiful homes. But high income doesn't automatically create financial freedom. In fact, high income often allows people to borrow even more. Banks are willing to lend larger amounts because Swiss salaries are generally strong and mortgage rates have historically been relatively low. And that creates a dangerous illusion. Someone earning 140,000 Swiss francs per year can qualify for a lifestyle that quietly consumes almost every franc they make. From the outside, they look successful. Inside, they're managing an endless list of monthly obligations. Here's something most people never see. A surprising number of high-income households still live paycheck to paycheck. Not because they don't earn enough, but because every future paycheck has already been promised away. Mortgage payments, car leases, insurance, health insurance premiums, private school fees, credit card balances, vacation financing, furniture installments, luxury subscriptions. Everything looks affordable when it's divided into monthly payments. Until one unexpected expense arrives. A medical bill. A major home repair. Job uncertainty. Or rising living costs. Without a healthy emergency fund, even a high salary can become incredibly fragile. From the outside, their life looks effortless. Behind closed doors, they're hoping nothing unexpected happens. So how does the illusion actually work? Let's look at the financial machinery behind Switzerland's fake rich culture. Switzerland loves premium cars. BMW, Mercedes-Benz, Audi, Porsche, Tesla. But many of these vehicles aren't owned. They're leased. Dealerships don't focus on the total price. They focus on one question. What monthly payment feels comfortable? A 95,000 Swiss francs SUV suddenly sounds reasonable when presented as a monthly lease payment. The result? People spend years making payments on a vehicle that's constantly losing value. It looks impressive, but it rarely builds wealth. Swiss property values have increased dramatically over the past decades. Many homeowners have seen enormous increases in paper wealth. That creates confidence. Sometimes too much confidence. Instead of viewing their home as long-term security, some begin treating rising property values as permission to spend more elsewhere. Larger renovations, more expensive lifestyles, higher monthly commitments. On paper, their net worth looks larger. In reality, much of that wealth remains tied to their home and isn't easily available without taking on additional financial obligations. A rising house price doesn't automatically mean growing financial freedom. By now, pay-later services have quietly changed consumer spending across Europe, including Switzerland. At checkout, instead of paying today, you're offered several smaller payments. It feels harmless. It feels manageable. But something important happens psychologically. The pain of spending disappears. A 300 Swiss francs purchase doesn't feel like 300 Swiss francs anymore. It feels like only 75 Swiss francs today. Then another 75 Swiss francs. And another. Soon, one small payment becomes 20. Individually they're tiny. Together, they quietly drain every paycheck. But none of these financial tools are the biggest problem. The biggest problem lives inside our minds. Social media has turned everyone into their own marketing department. You're not comparing your life with someone else's reality. You're comparing your reality to their highlight reel. You see the luxury apartment, not the mortgage. You see the ski holiday, not the credit card statement. You see the designer clothes, not the monthly payment plan. You see success. You don't see stress. Every scroll encourages you to believe you're falling behind. And when enough people feel behind, they begin buying lifestyles they haven't actually earned. The illusion spreads. One financed purchase inspires another. Until everyone is competing, using borrowed money. Now let's talk about something much less exciting. Real wealth. Because real wealth almost never goes viral. Real wealth is surprisingly boring. It's driving a reliable car long after everyone else upgraded. It's living below your means despite earning more. It's having 6 months of expenses sitting quietly in an emergency fund. It's consistently investing through retirement accounts and diversified investments year after year. It's sleeping peacefully because unexpected bills don't create panic. Real wealth isn't loud. It doesn't need validation. It buys something far more valuable than luxury. It buys options. The option to change careers. The option to start a business. The option to retire earlier. The option to say no. That is what money was always supposed to buy. Freedom. Not attention. The people who appear richest online often have the least flexibility. They have to keep earning. Keep upgrading. Keep performing. Because if the income stops, the lifestyle disappears. But the truly wealthy person? Nobody notices them. They don't need expensive symbols. They don't need strangers' approval. Their investments keep growing quietly. Their savings continue compounding. Their stress stays low. And year after year, their freedom grows. So the next time you're scrolling late at night, and you see another luxury SUV, another renovated chalet, another 5-star holiday, remember this. You are not necessarily looking at wealth. You may simply be looking at expensive monthly payments hidden behind beautiful photographs. Don't compete with appearances. Compete with your future. Choose the reliable car. Choose consistent investing. Choose financial security over financial theater. Because in Switzerland, the richest people are often the ones nobody notices. And in 2026, the greatest luxury isn't looking rich. It's being financially free. If you enjoyed this video and learned something new, don't forget to like, subscribe, and turn on notifications for more videos about building real wealth in Switzerland. Thanks for watching. And I'll see you in the next video.